You will see companies that have 10 people create the amount of transactions that is equivalent to the monthly transactions that Walmart need to process. Digital assets is the most transparent asset in the world. You can see every single movement happening on chain.
Capturing and reporting of all on-chain transactions for crypto companies or any other entities that handle digital assets is as critical and important, just like any other company would for its financial transactions. Now, small crypto companies or entities even produce very high volumes of crypto on-chain transactions, and it is solving that and making it easy for a reporting perspective is a problem that today's founder, Tal Zackon, the founder of TRES Finance, is fixing and helping digital asset companies manage their crypto transactions. I'm Shri Misra. Welcome to Alpha Unhashed. Tal, welcome to Alpha Unhashed.
Thanks for having me. Good to be here.
Tal, tell us, how did you land up in crypto compliance and auditing, more specifically the financial accounting part of that, and a little bit about your backstory?
Sure. So, as you can hear, I'm originally from South Africa. I moved to
Yes,
Israel when I was
can't
a
miss
kid.
that accent. As we were sort of having this pre-chat for 5 minutes, I was like, yeah, that sounds familiar.
Yeah. So I moved to Israel when I was a kid, grew up here, served for about 6 years in the Israeli Special Forces. That's where I met my co-founder, Elon. And after the army, I went to study, spent some time in the US studying there. And when I got back to Israel, I joined an early stage venture capital firm based in Tel Aviv. And part of what I was looking at and researching was blockchain and crypto. And in 2019, I led the first crypto-oriented investment in a company. Turned out to be a great company, was acquired by Shapeshift later on. And ever since was fascinated with the technology and the use cases. Then we had the winter, and I kind of got an instruction from the GPs that I should kind of stop digging into that topic. And then we had the rebranding to Web3 around 2021. And that's when the hype came back up. And I was like, okay, let's go see what's going on there. We did a few more investments out of the fund. And then at the end of 2021, I was on thinking about my next move. And I knew that I wanted to build a company that is an infrastructure company, a data company, and that is involved in the digital asset Web3 space. And then when Elon, my co-founder, and I started researching the space, we saw that there was a significant gap when it comes to how CFOs and compliance officers are able to engage with digital assets and adopt this technology and different use cases to make their lives much easier, and for the whole organization, of course. And we started building TRES Finance. So that's kind of the backstory and how we got started.
Mm-hmm. And what can you define for everyone what exactly are the challenges, or even before we get into that, what does crypto accounting and compliance mean? What all does it encompass?
Sure. If you think about what a company is today, a company is a regulatory framework, right? You apply using a lawyer or handing in papers and getting a certificate that now you have a company. And once this company is established, you have to comply with different regulations. You have to go through annual audits. You have to pay taxes. You have to reconcile all your financial activities, right? Now, this is a must for any company in the world, no matter if they're touching digital assets or not. And it's already kind of challenging. When you start engaging with digital assets, crypto, that's when things become even more complex. The traditional finance usually runs on bank accounts and Swift as the rails, and the amount of transactions usually isn't too crazy to handle. You usually handle 1 or 2 currencies, maybe 3, and things are pretty simple. When it comes to digital assets, you will see companies that have 10 people create the amount of transactions that is equivalent to the monthly transactions that Walmart need to process. Okay, you'll see companies working on 10, 20, 30 different blockchains instead of one rails like the traditional financial system. You'll see the same asset living on these different rails, and now you need to cluster them and show that they are the same. And then how do you build out the inventory and the cost basis of each and every transaction to realize your gains and losses, and how do you report this to the regulator? So in order for you to run a compliant and diligent company, you have to comply with the basics of what a company actually is. And that includes the financial compliance, and a subcategory of that is the accounting also.
Right. So, and this is obviously applicable. I mean, for those of us in the crypto world, we know exactly how challenging it becomes in terms of reporting, especially when there is the framework of reporting is designed for off-chain companies, which is all the rest of the world. For crypto companies that are doing on-chain transactions, especially DeFi protocols, projects, DAOs, it becomes very, 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 very different to kind of bridge that into that reporting format. But it would also apply to even Web 2 or sort of traditional companies which are holding on to digital assets directly in their wallets. So how your services apply to sort of a bulk of it towards crypto companies and some towards the other side, or how does it pan out?
I would say this: once a company touches digital assets, they need a platform that knows how to bridge the data between digital assets and the traditional finance. Okay? Once you touch a stablecoin, a Bitcoin, Ethereum, or you engage with some kind of DeFi protocol, you will need a system in place to be able to capture all the data, transactions, balances, historical balances, realized gain and loss, and report on all of this. The ability to do this manually is very limited. Of course, as long as the scale is small and has, 10, 20 transactions a month, these things can be done manually. But once it scales just a bit, the manual work that has to be invested and the resources that you'll need to allocate to manage this part just doesn't make sense for a company. And that's when TRES becomes a need.
Mm-hmm. Okay. So, and how has this, the complexity of this, how has this been evolving? I understand, for example, more recently in the US, the IRS has come up with a wallet cost basis reporting now more recently, right, from this year, and which seems quite bizarre in some sense, but also there is a logic, a rational when you look at it from the other side of the table. So how do you guys think about that, and what are some of these challenges? How are you seeing things? Is it becoming more and more complex as we move ahead?
Sure. So in the TRES platform, our customers have the flexibility to choose how they want to run the cost basis. They can choose if it's per asset or per wallet. If they decide to go per asset, that means that if they hold, for example, ETH in 5 different wallets on different chains, all the ETH they have will be recognized as one inventory, and the cost basis will be mutual. If they move to a per wallet basis, which is, as you mentioned, is being incorporated into the regulatory framework in the US, each wallet will have its own stack, its own inventory as an individual wallet. Now, most companies that we've worked with across the years have been working on an asset basis, and now they need to move to a per wallet basis. There is a significant challenge moving from per asset to per wallet basis, and we have built an automation in TRES to be able to align your balances as of the date of when you changed it to the per wallet basis. So today we are already working with our customers to reallocate different assets using automations inside TRES to be able to comply with this new law.
Mm-hmm. And I mean that's just of course the US, but I know you're based in Tel Aviv in Israel. What's what's your sort of leaving TRES aside as well, which is your company? What's your experience of the regulatory framework for accounting for digital assets across the world? So how are you seeing them being very distinct from each other? Maybe you could throw in a couple of examples for the audience to really appreciate how challenging it gets. And also talk about, from now coming to TRES perspective, where are your most of your clients, and how does it look for them?
Sure. So it's very important to note that the challenge around working with digital assets and the whole financial compliance aspect is caused due to uncertainty and not enough clarity around how to handle certain transactions and assets. What we've seen in the past couple of years is more clarity around the world, except for the US, which I think is coming in now. We can see that there's the MiCA regulation that has started to apply in Europe. 2025 is actually the first year that companies need to comply with this. And you probably see lots of announcements from different exchanges in Europe that are now saying that they are MiCA compliant. You will see that in the Emirates and Dubai, for example, you have the VARA, that is a framework that also brings clarity into how to engage with digital assets, and that has boosted the ecosystem and the onshoring of companies to the Emirates and to Dubai working in the digital asset ecosystem. And we are seeing the work that David Sachs is doing in the US as the crypto and AI czar, and how he's looking at these frameworks. I think he's taking a lot of inspiration from these frameworks I just mentioned, and is looking how to apply different frameworks in the US to make it much easier. For example, the stable coins, and how to look at that as part of the US economy, and how to maintain the dominance of the dollar in the world by leveraging stable coins and seeing more and more stable coins that are pegged to the dollar being used in the world. So that's kind of how we see things. How TRES takes a significant role in what I just mentioned is we understand that many companies we work with will need to comply with these regulations. And we understand that there aren't enough players that are automating this to not even say that understand how these things work. We see law firms, we see consulting firms, and a lot of the work they're doing with their customers is very manual via spreadsheets and emails, and just looks like something that belongs to the 90s, to be honest. What we're doing at TRES is we are building a software that once you've connected all your wallets and your exchanges and your bank accounts, we build out the financial data lake on the back end. And on top of that, we build questionnaires and automations using AI that understand your activities and are able to guide you through the process up until the end result, which is an output, a zip file or a Google Drive that you can then take to the regulator and say, here, everything is prepared. I'm compliant. Please approve my request and my licensing.
Mm-hmm. So, but overall, what I hear you say is that it's obviously been the uncertainty around how digital assets are to be treated, which was the big cause. And over the years, in your experience, you've seen that that uncertainty is reducing because several regulatory frameworks, say VARA in UAE, MiCA in Europe, or for the matter, MS in Singapore, or IDGM in so these have all kind of helped bring in some more clarity, and US is moving there as well, which which according to you in is one of the regulatory frameworks which is much more clearer and is more simpler in terms of its efficacy as well as the adherence or compliance effort.
um, it's funny trying to understand or to say which one is easier or more clear. I would say probably the UAE framework is the not the easiest, but maybe the most favorable towards companies engaged with digital assets. MiCA really depends on what kind of company you are. Asset managers, for example, don't need to comply with it. Exchanges, it looks very different. My assumption is that the US will probably have the most favorable framework while also maintaining the balance between favorability and usability, let's say, but also safeguarding the end user and the retail market from scams, etc.
Mm-hmm. So, given the volume of transactions, one is obviously from a reporting of assets or wallets for, let's say, for holders of digital assets or treasuries of projects or crypto companies. The other is all their expenses, for example, all the expenses, revenues that the especially DeFi projects, DeFi protocols have, and and expenses which are run completely on chain. So given given that unlike in traditional accounting financial systems where whilst the expenses are being incurred they are getting labeled as such, whereas on-chain expenses are is essentially a transfer out, but there is no labeling of it. How do one aspect is obviously aggregating all of the on-chain data. That's one aspect of it, probably easier to solve once you understand the technology, but the labeling of them, how do you make it more automated using a machine learning framework, or how do you do that?
Yeah. So we have two things that we do. Okay. First of all, we've built a machine learning model internally that knows how to read the metadata of the transaction and based on that label different transactions. Okay. Paying to a vendor is something I'm going to touch in the second phase, but that is something that the metadata is just transferred. But depositing into a liquidity pool, withdrawing from a lending protocol, staking assets, receiving rewards, these are transactions that if you know how to classify using the metadata, you can automate a large amount of the labeling. So that's the first part. The second part is how does TRES know to classify a certain transaction as a payment to a team member, for example? Okay. And what we've seen is that many companies actually build an address book inside TRES. Okay. And they give different wallets names and also add them into groups, vendors, team members, etc. Then they build rules inside TRES. Once you do that, the whole flow is automated. So we do need the initial input for some transactions from the customer itself, but the most of the transactions are labeled in advance.
Mm-hmm. Okay. Yeah. Yeah. So I mean, obviously, so once you're on the platform, it's much simpler, and of course, all DeFi native transactions, those are can be read from the metadata. So that's interesting. What's from a compliance perspective, just like one is the auditing accounting side of it. Now, from a compliance auditing compliance perspective, is there work that you think that companies like TRES will move into ultimately, as far as crypto DeFi companies are concerned? Just like you have, let's say, the big four and large audit firms established for TradFi companies for their audit and compliance. Is there a similar, and in crypto we've got multiple layers of sort of audits, right? One is the security audit side, but what I'm talking about is kind of the financial audit side. Is that something that you think crypto accounting companies will move into as well?
What we've seen is that the big four are already there. For the large companies, they already do the audit. There are companies that the big four and other auditors, by the way, do not want to touch, because when they start the engagement with them and they start working with them, they say, okay, we need the initial data from you. We look at the data and they see that some of the data just doesn't make sense, and it's missing at times. And there's a reputation risk, like, it happened with FTX, right? They went through audit, they got all the audit approvals, and then you saw what happened. That means the audit wasn't good enough, and the company, I'm not gonna mention names, that actually did the audit for them, was kind of marked as a not reliable auditor. So there is skepticism when it comes to how to audit these kind of companies, and it's not trivial for a big four to be able to work with a company in the digital asset space, but they do it.
Okay, so you want to continue on that thread, for example, how so? But there will be traditional conventional audit firms auditing crypto companies, and they will need that bridge of the data to be presented to them in an appropriate form for them to be able to move ahead. Do you see that role becoming bigger and bigger for crypto audit companies?
Of course, the reason it's so expensive for crypto companies to be able to go through audit is because the auditors many times do not know how to handle the data, and they throw more people at it, more hours, and the rates go up. That's why we exist. We bridge between the auditors to the teams that need to go through the audit. Okay, just like a few weeks ago, we have a very large customer, a well-known exchange. They had to go through audit, and they just sent the auditors to us. They said, auditors, TRES auditors, please give them whatever they need. The auditors sent us all the requirements. Within a few clicks, we had all the data, sent it to them, and they went through the audit. That easy. So it changes the whole experience of going through audit for digital asset companies.
Mm-hmm. Okay. I mean, talking about some other bridges, cross-chain bridges, for example, once bridging of assets comes into play, is that something that you guys are able to handle as well, in terms of creating a clear ledger for either assets or wallets? And if and how let's explore that. How do you handle that? I mean, I was getting into, for example, mixers and blenders. I mean, but those probably are I'm sure the companies which are handling digital assets are and using mixers and blenders are not probably the clients that you may be having. But apart from that, right, apart from that, projects and companies which would be using cross-chain bridges often, how do you guys handle that?
So it's a really interesting movement, because sometimes it's one transaction. You see the inflow outflow in one, and then you can regard that as an internal transfer and catch it when it happens. The more challenging transactions are the one that actually split into two. You see the money go into the bridge, and then you see nothing come out on the other side. Then you see another transaction of an inflow coming out. And then depending on the time frame, we know how to capture those two and say, hey, the amounts are somewhat similar. The time is very close. Okay, we suspect that this is an internal transaction of a bridge, of movement of one asset of the asset from one chain to another. And this is an internal transaction. So we know how to capture these most of the times automatically. But it's a very challenging aspect of the business, because it took us time to understand what is the average time frame of when the transaction goes into the bridge and comes out of the bridge from the other side. Okay, and we built an algorithm that says if there's a deviation of the value of the transaction within a time frame, most likely this is an internal transaction through a bridge. And we also know how to capture the metadata of the transaction, showing that this is deposited into bridge. So we also know how to classify this automatically.
Okay, so that's and you're able to do with sort of near 100% precision now.
100% is difficult to say. I would say 95% and above.
And then the rest. But does it lead to sort of errors in accounting, or though some transactions have to be kind of just labeled manually sifted through?
TRES Finance is a workflow product. The finance teams, the accounting teams, the audit preparation teams, or compliance teams use TRES as a tool to achieve their end goal. Okay, the end goal can be closing the books, reconciliation, paying their taxes, going through audit. So it's always their responsibility to go through the transactions, the labeling, and filter out exactly what's going on. So even if it's a 95% precision, the extra 5% should be captured by the team itself, and then they can always flag to us, guys, listen, you missed something here, and then the machine will know how to capture that for the next time.
Mm-hmm. Yes. No, obviously it's the sort of team's responsibility, but how do they identify it in the first place? So I'm guessing, there will be some amounts of manual oversight till
there will always be manual oversight. The responsibility is always on the team that needs to go through the specific audit or closing the books or paying the taxes. Okay, there always has to be a review. I don't recommend using any kind of software. Just download and hand in a report to the regulator. There always has to be someone that reviews the data and makes sure that everything aligns the way you expect it to align. The reason is, by the way, is, there's a joke that says, if you give two accountants a spreadsheet and ask them to analyze it, you'll get three answers, right? No accountant will ever do the exact same work as another accountant. It's science, but there's also an artsy aspect to it.
All right. Is there a KYT element to your platform as well for know your transactions? So do you track transactions that the company's sort of wallets have been engaging in, or any of that sort? Any insights from that?
Sure. So as I said, first of all your internal wallets are going to be labeled, and then you can have an address book where you can add contacts. So you'll be able to see each and every third party that you have interacted with. You can add names, you can add them into groups, and you can give them different characteristics that will then be reflected in the database for you to go and use those characteristics to filter and search for different transactions. We do not have risk scoring similar to Chainalysis on transactions. We do not do AML activities. That is less of what we do. We are more on the financial compliance side of things, how to get through your back office operations, how to comply with regulatory frameworks, how to be able to achieve your licensing and show that you know exactly what's happening inside your wallets, what you're holding, what your customers are doing, etc.
Mm-hmm. Okay, right. Yeah, just before this, I don't know. I was just came up on Kobe. I think written in one of his Telegram channels, talking about the fact that there are several DeFi projects, protocols today in the very recent past. 100% of their revenues have come from DPRK, from hacked assets, from the Lazarus group being routed through them, and everybody's aware of it as well, and nobody's doing anything about it. So the industry is just waiting to invite external regulation in a heavy-handed way, and it's strange that the whole crypto ecosystem is not doing anything about it. So who's going to kind of do something about that?
I just want to say something about that. Okay, let's take the hack into Gnosis, right? We just saw 1.3 billion worth of Ethereum. I think it was stolen. That hack had nothing to do with crypto. It was a cybersecurity hack into Gnosis. Okay, it wasn't a hack into a smart contract. It wasn't a hack into a wallet. It was a manipulation of the front end using a gap in how Gnosis were managing their dev environment or something like that. Okay, Gnosis were the target of the attack because it's more lucrative for crime organizations, or in this case, specific countries, to go and try and heist digital assets because you can take them and move them very, very quickly. But, and this is also very important to say, unlike TradFi and Fiat, and we know that for years you used to send money to Switzerland to launder and hide money from the regulators until the US after 9/11 came and knocked on the Swiss bank and said no more. Unlike that, and still, by the way, most of the money laundering today is done in fiat. And most of the crime organizations and terror group in the world use fiat. Digital assets is the most transparent asset in the world. You can see every single movement happening on chain. And what is important for me, and I say this a lot to my friends that don't come from the space, you do not understand a digital asset has been painted as some kind of safe haven for criminals and terror groups only by the media. Only by the media. If you really look
and vested interests as well in the existing financial systems. Yeah,
of course, the banks and everything, right? But if you look at the amount of assets that are laundered or used for these kind of activities on the fiat side, it's you can't even compare the two. And by the way, the US is able to seize most of the assets that are stolen or hacked and are able to track them. Okay, so it's really important for me to know, because I get these questions a lot about hacking and stuff like that. As a community, as an ecosystem, we have to do our best to protect our assets and our customer assets. Okay, if Gnosis, by the way, I mean, of course, it's Gnosis' fault, right? But the exchange, I don't want to mention names. The exchange that was using Gnosis to access billions of dollars worth of assets, it's also their fault. Gnosis is not built as an enterprise-grade banking wallet like Fireblocks, BitGo, and Anchorage, etc., to be able to have access to these kind of assets. Okay, it's on us as an ecosystem, as founders of these kind of companies, to say, I have the responsibility to safeguard my customer assets using the best technology and the most battle-tested platforms out there. And if you're going to be using Gnosis to move $1.2 billion, the blame is also on you for even allowing this to happen.
Yeah, I think Tal, you touched upon multiple things there. So quite clearly, obviously, that hack, the Bybit hack, wasn't a smart contract vulnerability. It was a front end getting musked. So that's understood. Also the fact that all transactions on chain are completely visible. So it's actually dumb to be laundering money on chain, and it's absolutely traceable. It's just the sort of endpoints of where it lands, where it can be sort of easily tracked. However, I think what I was touching about is somebody like Kobe being a big voice in the space, bringing about the fact that the very fact that this transparency exists, so we know in many ways where the capital is, where the assets are flowing from, and several DeFi projects have had, like, most of the revenues in the last month or so come from tainted monies capital being deployed into them, and everybody knows that as well. So unless there is some proactive action in terms of not accepting and blocking out this capital out of the ecosystem, it will lead to a situation where external regulation will become heavy-handed. I think that was the point, and I actually think that, yeah, he's made a very pertinent and a right point on that front.
Yeah, I see what you're saying. Financial institutions today in the fiat world have the heaviest regulation. The heaviest regulation. They need to comply with so many different standards. This doesn't apply to companies that engage with digital assets or exchanges, by the way, that hold huge amounts of assets. And I see this picking up. I think it's going to be part of the revolution. I don't know if it's called a revolution, but the change that's gonna hit us. I think MiCA is already doing a good job in that. I think the SET is going to follow.
Yeah, no, absolutely. So what are would you say, from a sort of crypto on-chain asset accounting systems or practices rather? What are emerging as some of the best practices that crypto projects could embrace?
First thing is I'm going to talk about digital asset financial compliance in general. Okay. The first thing is, if you're working on an exchange, many exchanges, well, it's CFI, of course, many exchanges only backtrack the data up a few months backwards. Okay. You cannot download data from 2 years ago. So if anyone's listening to this podcast, the first thing I want you guys to go and do is go to the exchange you're working on, download the data now. To the last point in time that they allow you, just download the data, because many of the data is going to be wiped out and you will never have access to it again. And this is crucial for you to be compliant. Okay, that's the first thing I want you to do. The second thing I'm going to say is, if you are a company that engages with end users, retail, okay, please do not mix your funds, your company funds, with your customer funds. Separate wallets, separate entities, separate transactions, separate everything. Do not commingle assets and transactions. That is a very bad practice that we see more often than you think. Okay. Third and last but not least is, there will come a stage where scale is more than what your team can work with. Using software is the right way to go. Do not try and build this internally. It will not work, I can assure you. Go work with a best of breed solution like TRES Finance to take over all your financial compliance aspects of the business, and let your finance team focus on what's really important, which is advancing the business, and not the nitty-gritty things of labeling transactions, building out cost bases. That is not what you hired them to do.
Mm-hmm. Okay, they're the very three crisp points for any crypto project to sort of look at very closely and implement these all these best practices for sure. And what have been Tal, share with us what has been one of your most successful and happy achievements in your journey of building TRES.
Last year in July, we brought the whole team together from all over the world to Israel for a week. And, I don't talk about fundraising and customers and business success. I want to talk about the team. We grouped up on the third day on the steps of the hotel we were staying at to take a team picture. And when they were taking the picture, I just looked around and I said, I really, really love these people. They are amazing. They are doing so much to make Elon, my co-founder, and my vision come to life. And they're doing the best they can. They're working so hard. And I want this company to succeed, not only for me and Elon and the investors, but also and mainly for them. And I think that was a great moment for me personally.
Okay, all right. Well, that's a very. I know, as a founder, these are these sort of touching moments in one's life, especially building and scaling, companies. And to that, I will raise a toast to team vibes. And it was a sort of wonderful thing you came out with. So here's to that.
Cheers to that. Cheers to that. Thank you.